I think we'll see it correct and pull back with the financial systems and all of that stuff, forced liquidation. And then there'll be an opportunity to get in for the next multi-year rally. It'll kind of be like buying back at 2008, 2009 lows and having that 4 or 5 year rally to the upside. So I'm neutral to bullish on gold. It's hit both of its targets. We actually closed our gold position and now we're moving elsewhere. We're going to let gold do its thing here and then reload during the next financial reset and get into gold miners and silver and
Gold prices have surged to an impressive 2-month high, surpassing $2,700 per ounce. This remarkable increase is influenced by various factors driving demand for this precious metal. The rise coincides with the recent weakening of the US dollar and growing economic uncertainties related to global trade policies. As we navigate concerns about stubborn inflation and escalating government debt, gold is testing important resistance levels, reflecting the growing interest in this safe haven asset. Across the global currency market, precious metals are displaying incredible strength, hitting new all-time highs against major currencies such as the euro, British pound, yuan, Canadian dollar, and Australian dollar. This broad performance underscores gold's enduring appeal, especially in today's economic landscape, where investors seek security. ChrisVermeulen from the Technical Traders has observed a fascinating market dynamic, the unusual scenario where the US dollar and gold are trending upward simultaneously. This trend often indicates significant global financial apprehension. He suggests that this current correction phase might present exciting opportunities for long-term investors, drawing parallels with the market conditions we saw during the lows of the 2008 and 2009 crisis. Several key factors stand out in gold's stellar performance throughout 2024. The Federal Reserve's shift toward a more accommodating monetary policy, ongoing geopolitical tensions, and robust central bank buying drive interest in this precious metal. With concerns about potential bank failures, a downturn in the real estate market, and vulnerabilities in the stock market, many investors are keen on safe haven assets like gold. However, analysts note that despite these substantial gains, gold still faces the challenge of decisively breaking out of its 2-month consolidation phase. There may be additional hurdles in the near term, mainly as investors evaluate the new administration's policies on immigration and international relations. Yet the increasing appetite for physical gold holdings suggests a significant shift towards tangible assets to safeguard against economic uncertainties and market volatility. We encourage you to stay tuned for our expert analysis of these developments. Don't miss out on future content that can enhance your investment knowledge. Hit that subscribe button and turn on notifications to remain in the loop. Your support means the world to us.
Gold is still bullish. Gold is still in a strong uptrend. Now it has hit 100% measured move based on 2 major cycles. So the last super cycle from the low to the high and down to this low, if we draw that out, Fibonacci shows, that we hit this level. And this was something I had talked about back in 2019 when we broke into this new bull market phase. I was able to say, hey, listen, the next major goal, upside target is going to be this 618 target, and it should pause, and then we should go up to that 100%. And so we've hit that on this monthly chart. And what's really interesting too is if we look at the shorter one, this fresh news cycle to the rally up and this pullback, and we carry it forward, gold has also hit that 100% measured move. So it doesn't matter what half of this cycle you look at or which pattern, we have hit those levels. So I think there is a little bit of upside left in gold. We might see one more push, potentially to 3,050. So there is percentage-wise potentially one blow-off phase. And that's typically kind of what happens near the end of a move. You have a blow-off phase, and we could see a big spike up, and then it can get hit. And then I think we'll see it correct and pull back with the financial systems and all of that stuff, forced liquidation. And then there'll be an opportunity to get in for the next multi-year rally. It'll kind of be like buying back at 2008, 2009 lows and having that 4 or 5 year rally to the upside. So I'm neutral to bullish on gold. It's hit both of its targets. We actually closed our gold position and now we're moving elsewhere. We're going to let gold do its thing here and then reload during the next financial reset and get into gold miners and silver and when you look at gold, it's been up and to the right. And if I just flip to the dollar chart, it's pretty much been, well, not quite the same, more so recently in the last 6 months or so, up and to the right, both of them. So this is a warning sign. I mean, I think the whole world is liquidating. They're counting on the US coming out ahead of the game. And then of course, people moving to physical gold is get me out of the financial system. Our bank's going bankrupt, or, real estate going to pop, stocks going to, burst that bubble and everything unwind. So people are trying to just get to cash, get to physical gold. It's why Bitcoin, I think, has done well. People are just trying to get away from the financial system because I think we're going to have a financial crash. And that's just how money flows. Money flows to where they think it's safest at any given time. I mean, this just goes like I see comments all the time. People are like, well, there's no way Trump's going to let interest rates go up. He's got real estate and he's not going to let the dollar go up. But the reality is, like, one person can't truly control the overall market. What's going to happen is going to happen. He might try to do some stuff, but the reality is the market really is so big. And when the momentum starts in a direction, you can't stop it. He can't just knock rates down and knock the dollar down just for his portfolio. It doesn't work that simple, really.
Switching gears to the US dollar, it continues to show promising strength. Market analyst ChrisVermeulen predicts another substantial rally for the currency, citing its higher highs and lows trend. He refers to historical context where turbulent market periods, notably the financial crises of 2000 and 2008, have typically solidified the dollar's role as a safe haven currency. This week, the US dollar index experienced notable volatility surrounding recent developments in trade policy. Initially, the absence of any tariff-related executive orders during the new administration's early hours led to a temporary dip in the dollar on Monday. Markets had anticipated immediate action regarding trade restrictions. However, the narrative shifted dramatically following the president's late Monday announcement of 25% tariffs on imports from Canada and Mexico, set to take effect in February. This unexpected policy move swiftly devalued the Canadian dollar and Mexican peso. On Tuesday, the market bounced back, reversing Monday's losses across various asset classes and currencies, showcasing the profound impact of trade policy on currency evaluations and North American trade relations.
I think the US dollar's got another big leg up. I think typically when we see chaos in the markets, the 2000 financial crash, we had the 2008 financial crash, financial reset. I think we're going to see, a big leg up here on the next move. We've got rising lows, like higher lows, higher highs. The dollar's channeling up, and I believe we're going to continue to see this move up. And this is going to strengthen, obviously, the dollar, and it's going to wreak havoc for a lot of other currencies. When we look at all these other currencies here, the dollar has been moving up very strong compared to all the other currencies. And so this is going to cause a big problem, I think, even with U.S. companies, multinational companies who deal across, around the globe. The U.S. dollar is going to become so expensive that they're going to have to like cut their pricing, cut their all this stuff. It's going to hurt sales, and it's going to really cause a lot of problems with earnings. And of course, that bleeds over to layoffs and cost cutting and all kinds of stuff, which creates this whole snowball effect or adds to the whole kind of, I think we're seeing a global recession take place. So bullish on the dollar. I think this will put pressure on commodities. It'll put pressure on a lot of stuff temporarily. But I think the dollar is a low volatility, bullish move. It's a way to take advantage of chaos without having to be like in something really volatile. So looking at the US and Canadian dollar, like right now, one US dollar is $1.43 for us Canadians. Very expensive. Based on this chart and based what I think is unfolding, I think we're going to see oil break down, which means that the Canadian loonie will fall in value. I think we're going to see the US dollar go up, which means it's going to create this huge spread. Based on this chart pattern, I think we could actually see about a $1.74 exchange, which is like enough to make most people cringe. Canadians, you're not going to want to go to the States to go on holidays anymore. So there is potential for some huge moves across the board. And I mean, this is what happened in the tech bubble, the financial crisis, oil going to zero not that long ago. Anything can happen. And I think this year is going to be a year of just stuff will be like, wow, I never knew that could happen. It'll just be another one of those years. And the key is of being able to identify and navigate these so that you can come out unscathed or hopefully with a lot more money, because there's ways to take advantage of all of these plays. So I would expect the US dollar to go up. And if you own equities or own real estate in the United States, it's a real trade-off. There's a great exchange rate. It might go a little bit higher, but liquidating and going to cash, holding US dollars is a really good play, because if you think about it, if real estate is going to crash and you own US real estate, I'm looking from a Canadian perspective, sell the US property, go to cash, but keep it in US dollars. The US dollar is about to rally like 20%. And then once all chaos hits and the dollar spikes up, cash out of the US dollars, move to Canadian. And I think the Canadian dollar will rise from the ashes. I think it's going to come down to a resource kind of move. And we're going to see resource heavy currencies like the Canadian dollar become a powerhouse and come back from the dead and allow you to grow your wealth really well. So there's some really good plays unfolding here.
As we explore the intricate relationship between global gold prices and currency movements, it becomes clear how these market forces shape our current financial environment. With geopolitical uncertainties and evolving trade policies influencing investor sentiment, gold's status as a safe haven asset becomes ever more vital. At the same time, the US dollar's surprising strength amid policy changes highlights its crucial role during periods of market fluctuation. So, what strategies should investors consider to effectively balance the opportunities in gold and currency markets during these volatile times? We'd love to hear your thoughts in the comments section. If our discussion resonates with you, we invite you to join our community by subscribing and enabling notifications. Thank you for being a valued part of our journey.